Hello everyone, this is Alex Suslov, Head of Capital Markets at AD Mortgage with our AD Weekly Digest. As always, we're here to shed light on economic events, mortgages and market forecasts. Higher inflation at the core level and especially at the headline level have had little impact on the bond market. PCE year-over-year and core PCE year-over-year came out last week at 6.2% and 4.9% respectively, both exceeding expectations. By now, investors must be comfortably numb to the outsized swings in the financial markets. The latest one was spurred by intervention from Bank of England on Wednesday to slow a free-falling 30-year UK gilts price, which itself was self-inflicted damage caused by the UK government's plan to cut taxes. As a result of the Bank of England's unlimited support, which they quote as whatever scale is necessary, long-dated UK bonds staged a massive rally, which in turn lifted US Treasury prices off the overnight lows. As for updates at AD, we're being a strong bid for scratch and dent loans. Please make sure to reach out to Billy and share your pipelines. You may find his contact clicking on the link on this digest. And this week we're looking to employment, payrolls and jobs reports. Turning this to Billy at this moment to get more details on numbers and further expectation. Billy, hey, how's it going?
It's going good, Alex. At the last digest, we both, I looked back at it, we both felt that the previous week had been eventful. Everything's relative though, and for me, this past week left that last one in the rearview mirror. Most important news of this week figured to be PCE, and that one came in higher than expected, so market bearish. But I counted more than 17 numbers last week, so rather than go over those, let me just say, for me, the excitement was what the treasuries did, not why they did it. Monday and Tuesday saw yields continue to rise, now nearly 100 basis points just since September 1st. By Tuesday, the 2-year, the 3-year, and the 5-year, well, the 2 and 3-year had reached nearly 450, the 5-year had reached nearly 425. Then on Wednesday, the 5-year rallied nearly 30 basis points, one of the largest rallies I can remember recently. And in fact, I think it was larger than even rallies into the March 2020 COVID low. The Treasury futures left bullish outside reversal bars from lows that were lower than any made in about a decade. The dollar index, which has been going up almost as long as yields have been going up, traded to a 20-plus year high and then reversed on Tuesday and ended up with an outside bearish reversal. Gold left a bullish outside reversal from about a year, 12, 14-month low. And even crude oil traded down into the 70s, and a day later it was in the low 80s, and even though it wasn't a real reversal. It seems to me that there's change in the air, and I still think this is a bear market, but what I found interesting is that back in June, by the 5s and the 10s, at a time when consensus was that Fed funds would be at 350 by year end, the rally covered 100 basis points in barely 3 weeks and stalled around 250, which is where Fed funds were at the time. The high yields posted last week by the 2s, 3s, and 5s were between 420 and 450, which is where consensus said Fed funds will be at year end. Right now they're 3.25, so are we supposed to think we're going to rally to 3.25 by November? Seems pretty doubtful, but I do believe we're going to see some strong rallies from here. I think we're going to see improvement. I wouldn't rule out rallies being very significant within the confines of what I still think is a larger bear market. Next week should be dominated by unemployment. And lastly, let me say that while we're in Southeast Florida and we fared pretty well from Hurricane Ian, others on the other side of the state and north of us were not so fortunate, and prayers go out to those guys. So with that, flip it back to you, Alex.
Billy, indeed it was another surprising week for the markets. I wish everyone a great week. Make sure to stay on top of your pipelines and be careful with locks. Make sure you don't let those expire. I also want to remind everyone next Monday is a Columbus Day. Many banks will be closed. AD keeps its doors open, so feel free to submit your loans. We're there for you. Billy and I will be in Nashville for annual MBA conference October 24th to 25th. We'd love to set some time on our calendars or meet at AD cocktail party on Monday 24th at 6 p.m. Click on the link at the digest for more details. Make sure to subscribe to our YouTube channel and to Billy's daily market newsletters to stay on top of capital markets events. Thanks everyone, it was Alex Suslov, Head of Capital Markets at ADM Mortgage. Follow us on YouTube, like this video if you enjoyed, and stay tuned. See you soon.